Most traders don't fail because they lack strategy. They fail because deep down, they no longer believe they can win. And the moment you lose that belief, every loss feels personal. Every mistake feels fatal, and quitting starts to feel logical. But the traders who eventually make it, they all share one belief, a belief so powerful it keeps them standing while everyone else disappears. The market will test your confidence, your patience, your emotions, and your identity. There will be moments when you question whether you're wasting your time, whether you are talented enough, whether success is even possible for you. And in those moments, one belief will determine your future, the belief that failure is temporary, but growth is permanent. Winning traders are not people who avoided pain. They are people who decided that pain would teach them instead of destroy them. Today, I want to show you the one belief that separates traders who quit from traders who eventually win. They watch social media clips of people making thousands in minutes, and they assume profitable trading is simply about finding the right strategy. But the reality is very different. The market is designed to expose weakness, impatience, ego, and emotional instability. This is why so many traders quit early. The pain surprises them. The losses feel personal. The setbacks make them question themselves. What separates winning traders from quitting traders is not intelligence, education, or even strategy. It is the belief that struggle is not proof of failure. It is proof that the process is working. Every successful trader you admire has gone through periods where nothing made sense. They doubted their abilities. They took losses they could not emotionally handle. They made emotional decisions, revenge traded, over-leveraged positions, and destroyed accounts. The difference is that they did not interpret struggle as a sign to stop. They understood that trading mastery is built through pressure. Just like muscles grow through resistance, traders grow through discomfort. The market forces you to confront yourself. It reveals your impatience, your fear, your greed, and your inability to stay disciplined under pressure. That is why struggle is necessary. Most people want confidence before they take action, but confidence in trading comes after surviving difficult periods. You do not become mentally strong by winning easy trades. You become strong by staying calm after losses, by continuing to execute your system when fear is screaming at you to stop, and by learning how to think clearly under emotional pressure. The struggle is what creates the trader. Without it, there is no transformation. Losing traders often believe that a difficult phase means they are not talented enough. They compare themselves to others and assume successful traders had an easier path. But nobody sees the years of frustration behind mastery. Nobody sees the emotional breakdowns, the sleepless nights, the blown accounts, or the moments when experienced traders questioned whether they should quit. Success in trading is rarely dramatic. It is built quietly through repetition, discipline, and emotional endurance. The dangerous trader is not the one who never loses. The dangerous trader is the one who stops fearing losses because they understand losses are part of the business. Once you accept struggle as normal, the market loses its power to emotionally control you. You stop panicking after bad trades. You stop chasing perfection. You stop expecting trading to feel comfortable all the time. Instead, you begin focusing on execution, consistency, and self-control. Trading is one of the hardest psychological games in the world because the market constantly attacks your certainty. It rewards patience when you feel impatient. It rewards discipline when emotions are out of control. It rewards long-term thinking when your mind wants instant gratification. That is why struggle is unavoidable. The traders who survive are the ones who understand this early. They stop asking, "Why is this happening to me?" and start asking, "What is this teaching me?" Most traders are obsessed with outcomes. They wake up thinking about money, profits, and whether today will finally be the day they make it big. Every trade becomes emotionally loaded because they are focused on what they can gain or lose instead of who they are becoming in the process. This mindset destroys more traders than bad strategies ever will. Winning traders understand something that struggling traders do not. Success in trading is not built by chasing outcomes. It is built by chasing growth. When you focus only on outcomes, your emotions become unstable. A winning trade makes you feel invincible, and a losing trade makes you feel worthless. Your confidence rises and falls with every candle on the chart. This is dangerous because trading requires emotional consistency. The market does not reward desperation. It rewards discipline, patience, and clear thinking under pressure. Traders who only care about outcomes often force trades, over-leverage positions, revenge trade after losses, and panic during drawdowns because they are emotionally attached to immediate results. Growth-focused traders think differently. They understand that every trade is feedback. A losing trade is not automatically failure, and a winning trade is not automatically success. What matters is whether they followed their process correctly. Did they remain disciplined? Did they respect risk? Did they execute their edge without emotional interference? These questions matter far more than the money made or lost on a single trade. Winning traders know that if they improve their decision-making consistently, profits will eventually follow. The market is one of the greatest mirrors in the world. It exposes emotional weakness instantly. If you are impatient, the market will punish impatience. If you are greedy, greed will eventually destroy you. If you are fearful, fear will stop you from executing opportunities. Most people try to fix these problems by searching for another strategy, but the real issue is internal. That is why growth matters more than outcomes. Trading is not only about mastering charts, it is about mastering yourself. A trader focused on growth becomes harder to break emotionally because they stop measuring their value by short-term results. They understand that one bad day does not define them, just like one good day does not make them a professional. This creates emotional stability. Instead of constantly chasing emotional highs, they focus on improving small habits daily. They review mistakes honestly. They journal their emotions. They learn patience. They build discipline slowly over time. This is how real confidence is created. The irony is that traders who obsess over money usually struggle to make it consistently. The harder they chase profits, the more emotional they become. But traders who focus on growth often become profitable naturally because their attention is on improving the skills that actually produce long-term success. They become patient enough to wait for quality setups. They become disciplined enough to control risk. They become emotionally strong enough to handle losses without collapsing mentally. Every professional trader understands that losses are part of the business. There is no perfect strategy, no guaranteed outcome, and no way to control the market completely. The only thing you can control is your development. That is why winning traders invest more energy into becoming better decision makers than trying to predict every move in the market. The traders who survive long-term are not the ones obsessed with winning every trade. They are the ones obsessed with becoming better every single day. Most traders believe success comes from finding the perfect strategy. They spend years searching for better indicators, secret setups, and magical systems that promise high win rates and easy money. But the truth is uncomfortable. Strategy is not the main reason traders fail. Emotional control is. A trader with average strategy and strong emotional discipline will almost always outperform a trader with brilliant strategy and poor self-control. Because in trading, your emotions decide whether you can consistently execute what you already know. The market constantly triggers emotional reactions. Fear tells you to close winning trades too early. Greed tells you to risk too much. Anger pushes you into revenge trading after losses. Impatience convinces you to enter weak setups out of boredom. These emotional decisions slowly destroy accounts, even when the trader actually understands the market well. This is why trading is not only a technical challenge, it is a psychological battle against yourself. Most traders lose money not because they cannot identify opportunities, but because they cannot manage their emotions once money is on the line. A strategy might tell them to risk 1%, but fear or greed pushes them to risk 5%. A strategy might require patience, but emotional discomfort makes them force trades anyway. A strategy might demand holding a winning position longer, but fear of losing profits makes them exit too early. Over time, emotional mistakes become more expensive than bad analysis. Winning traders understand that emotional control creates consistency. They know the goal is not to avoid emotions completely, because that is impossible. The goal is to stop emotions from controlling decisions. Professional traders still feel fear during uncertainty. They still feel frustration after losses. The difference is that they do not allow those feelings to dictate their actions. They remain disciplined under pressure because they understand that emotional reactions are temporary, but bad decisions can have lasting consequences. One of the biggest emotional traps in trading is the need to be right. Many traders treat losses like personal attacks on their intelligence. This creates emotional attachment to trades. Instead of accepting small losses quickly, they hold losing positions hoping the market will prove them correct. Ego becomes more important than discipline. But the market does not reward ego. It rewards flexibility and emotional maturity. The best traders are comfortable admitting they are wrong because they know protecting capital matters more than protecting pride. Emotional control also becomes critical during winning periods. Many traders become reckless after a series of successful trades. Confidence turns into overconfidence. Risk management disappears. Discipline weakens because they feel unstoppable. Ironically, some traders destroy their accounts faster after success than after failure. This is why emotional stability matters in both losing and winning periods. The trader who remains calm during losses and humble during wins gains a massive long-term advantage. Real trading confidence does not come from making money quickly. It comes from knowing you can stay disciplined regardless of what the market does. When emotional control improves, decision-making becomes clearer. You stop reacting impulsively to every price movement. You stop chasing excitement. You stop treating trading like gambling. Instead, you begin operating with patience, structure, and consistency. At the highest level, trading is less about predicting the market and more about controlling yourself. Strategies can be learned relatively quickly. Emotional mastery takes years, and that is why emotional control matters far more than strategy. Because a strategy only works if your mindset is strong enough to follow it consistently under pressure. Every successful trader has experienced doubt. Not once or twice, but repeatedly. There were moments when they questioned their strategy, their intelligence, their future, and whether they were wasting their time chasing something impossible. The difference between traders who eventually succeed and traders who quit is not the absence of doubt. It is the ability to continue moving forward despite it. Doubt is not a sign that you are failing. In trading, doubt is part of the journey toward mastery. Most new traders believe professionals are naturally confident all the time. They imagine successful traders sitting calmly in front of charts, completely certain about every decision they make. But reality is very different. Even experienced traders go through difficult periods where nothing seems to work. Markets change. Strategies stop performing temporarily. Drawdowns test emotional stability. Confidence disappears. This happens to everyone. The market has a way of humbling every trader eventually. The problem is that many struggling traders interpret doubt emotionally. The moment they feel uncertain, they assume they are not good enough. A few losses make them believe they lack talent. They compare themselves to others online and feel like everyone else is progressing faster. Slowly, frustration turns into hopelessness. Instead of understanding that doubt is temporary, they allow it to define their identity. This is how many traders quit too early. Winning traders think differently. They understand that doubt is unavoidable when pursuing something difficult. Trading is one of the few professions where uncertainty never disappears completely. No trader can predict the market perfectly. No strategy wins all the time. No amount of experience removes risk entirely. Because of this, emotional discomfort is normal. The key is learning how to function despite uncertainty instead of waiting to feel completely confident before taking action. Some of the greatest breakthroughs in trading happen after the hardest periods emotionally. Many traders develop discipline only after experiencing painful losses. Many learn patience only after destroying accounts through overtrading. Many become emotionally strong only after surviving periods where they wanted to quit completely. Difficult phases often force traders to grow in ways comfort never could. This is why experienced traders stop fearing doubt. They know it often appears right before transformation. One of the biggest mistakes traders make is expecting constant motivation. Motivation disappears quickly in trading because results are inconsistent by nature. There will be weeks when you feel unstoppable and weeks when you question everything. Professional traders do not rely on emotions to stay consistent. They rely on routines, discipline, and long-term thinking. They continue studying, journaling, analyzing mistakes, and executing their systems even during periods of low confidence. This consistency allows them to survive long enough to improve. Doubt also becomes dangerous when traders isolate themselves mentally. They begin believing they are the only ones struggling, but every profitable trader has faced emotional breakdowns, frustration, and fear. Many have blown accounts. Many considered quitting. Many spent years before becoming consistently profitable. The journey is far more difficult than most people expect. Understanding this changes your perspective. Instead of seeing doubt as proof you should stop, you begin seeing it as part of the process every serious trader must endure. The market rewards persistence more than perfection. The trader who survives emotionally has an advantage over the trader constantly searching for shortcuts. Because over time, experience compounds, discipline compounds, emotional control compounds, and eventually, the same trader who once doubted everything becomes the trader others admire. Every great trader survived periods of doubt. Not because they were fearless, but because they refused to let doubt decide their future. Most traders believe they need more motivation to succeed. They wait to feel confident, inspired, or mentally ready before they become disciplined. But motivation is unreliable. Some days you feel focused and powerful, and other days you feel tired, frustrated, and emotionally drained. If your trading performance depends on motivation, your results will always remain inconsistent. Winning traders understand a powerful truth early: consistency is built through discipline, not motivation. Motivation is emotional. Discipline is structural. Motivation changes depending on mood, results, and circumstances. Discipline remains stable even when emotions are unstable. This difference is what separates serious traders from emotional traders. Anyone can follow a trading plan after a big winning streak because confidence is high. The real challenge begins after losses, during drawdowns, or when the market becomes difficult. That is when discipline matters most. The market does not care how you feel. It does not reward excitement, hope, or desperation. It rewards traders who can execute consistently under pressure. A disciplined trader follows their rules regardless of emotions. They manage risk properly even after a winning streak. They avoid revenge trading after losses. They wait patiently for quality setups instead of forcing trades out of boredom. These small behaviors seem simple, but over time they create massive differences in performance. Most traders destroy themselves through inconsistency. One day they follow their system perfectly, and the next day they abandon everything emotionally. They increase position sizes impulsively. They chase losses. They overtrade after a bad morning. Then later they promise themselves they will become disciplined starting tomorrow. But discipline does not suddenly appear one day. It is built through repetition. It is developed through small actions performed consistently, especially when emotions make those actions uncomfortable. One of the biggest misconceptions in trading is that discipline feels good. It usually does not. Discipline often feels boring, frustrating, and emotionally uncomfortable. Waiting patiently for setups feels uncomfortable. Respecting stop losses feels painful. Ending the day after reaching your loss limit feels restrictive. But discipline is not designed to maximize excitement. It is designed to protect you from your own emotional impulses. That is why disciplined traders survive long-term, while emotional traders eventually collapse. Professional traders understand that success is not created through dramatic moments. It is created through routines. They prepare before the market opens. They review past trades honestly. They journal emotional mistakes. They stick to position sizing rules. They continue learning even during profitable periods. These habits may look repetitive, but repetition is exactly what creates consistency. The market rewards traders who can produce stable behavior repeatedly over time. Discipline also creates emotional freedom. Most traders think rules make trading restrictive, but the opposite is true. Without discipline, emotions control every decision. Fear controls exits. Greed controls risk. Impatience controls entries. Trading becomes mentally exhausting because every decision feels emotional. But once discipline becomes automatic, mental clarity improves. Decisions become simpler because they are based on structure instead of emotional reactions. There will always be days when you do not feel motivated. There will be periods where progress feels slow and frustrating. But disciplined traders continue anyway. They understand that long-term success comes from showing up consistently, especially when motivation disappears. This mindset creates emotional resilience because discipline removes dependence on temporary feelings. The traders who eventually succeed are rarely the most emotional or excited people in the market. They are usually the most consistent. They understand that profitability is not built through occasional brilliance. It is built through disciplined execution repeated over hundreds and thousands of trades. In trading, motivation might get you started, but only discipline keeps you alive long enough to win. Most traders quit too early. They experience losses, emotional pain, frustration, and uncertainty, and they assume those difficulties mean they are not meant for trading. But what they fail to realize is that almost every successful trader once stood in the exact same place. The difference is simple but powerful. Winning traders refuse to quit. Over time, that persistence transformed them into something dangerous. Traders who are emotionally strong, disciplined, experienced, and extremely difficult to break. The market tests people in ways most professions never will. It attacks confidence repeatedly. One week you feel unstoppable, and the next week you question everything. Losses create fear. Winning streaks create overconfidence. Uncertainty creates stress. Most people enter trading believing the challenge is technical, but eventually they discover the real battle is psychological. The market forces you to confront your weaknesses daily. It exposes impatience, greed, ego, fear, and lack of discipline with brutal honesty. This is why persistence matters so much. The trader who refuses to quit gains something more valuable than strategy knowledge: emotional endurance. Every difficult phase teaches lessons that cannot be learned from books or videos alone. Surviving losses teaches risk management. Surviving drawdowns teaches patience. Recovering from emotional mistakes teaches self-awareness. Over time, these painful experiences build mental toughness. The trader slowly becomes calmer, more disciplined, and less emotionally reactive. Most traders remain weak because they constantly restart. They jump from strategy to strategy, searching for shortcuts instead of mastering themselves. The moment discomfort appears, they abandon their process. But growth in trading requires staying long enough to develop deep understanding. The trader who keeps going begins recognizing emotional patterns. They stop panicking after losses because they have survived losses before. They stop chasing excitement because they understand patience creates better opportunities. Experience changes how they think. A dangerous trader is not dangerous because they predict every market move perfectly. They are dangerous because they can survive emotionally where others collapse. They remain disciplined during volatility. They stay patient during uncertainty. They manage risk even when emotions are intense. This emotional control gives them consistency, and consistency is what creates long-term profitability. One of the most powerful shifts in trading happens when fear of failure disappears. Beginners often trade emotionally because every loss feels catastrophic. They believe one bad trade defines them. But traders who refuse to quit eventually stop attaching their identity to individual outcomes. They understand losses are simply part of the business. This emotional detachment creates confidence. Not fake confidence based on hype, but real confidence built through survival. The market respects resilient traders because resilience allows continuous improvement. Every year of experience sharpens decision-making. Every mistake becomes feedback. Every difficult period strengthens emotional control. Eventually, the trader develops an edge not only technically but psychologically. While others react impulsively, they stay calm. While others overtrade emotionally, they remain selective. While others quit after setbacks, they adapt and continue forward. Persistence also creates patience, and patience is one of the rarest qualities in trading. Most people want instant results. They want quick profits, quick mastery, and immediate success. But professional trading is built slowly over time. The trader who understands this stops chasing shortcuts and begins focusing on long-term development instead. The truth is simple. The market eventually rewards the trader who survives long enough to evolve. Because the trader who refuses to quit does not stay weak forever. With enough experience, discipline, emotional control, and persistence, they eventually become the kind of trader the market can no longer easily defeat.